Hi everyone. Hi, this is Gabrielle. Welcome, welcome, welcome. I had a long day today. Oh my gosh, I was like trying to get ready for this event tonight, and it's a little hectic because I had a long day. I don't know why the light is acting up so much, but I had a long day today. How was your day? I know for me it's getting a little hectic because this is you see, I'm a little behind schedule. It is it is tax time. It is tax time. Tax time is a time where we all have to be concerned about compliance. Compliance is important. You have to think about what are you gonna do and how you're gonna get ready for tax season. And I know for some of you, it's very nerve wracking because you have a business or you have so many things that you have to consider. And some people, it's very easy because their taxes are not that complicated. But I wanted to share with you because I'm a tax professional. That's what I went to school for. I have a master's in taxation. So every year around this time, I have clients and I have work where I take care of clients who are in need of tax compliance. That's what it is when you have to file your taxes. It's compliance. But I'm also an EA. An EA is an enrolled agent. Enrolled agent, we are tax practitioners. We are actually licensed to practice before the IRS. And we had to go to a program where you study, took a test, an exam, and then when you pass the exam, actually it's more than an exam, it's three parts. It's one test, but it's three parts, and I had to do that in order for me to qualify to do what I'm doing now. So that's why I wanted to give you a little background, just in case some of you are wondering, what is her qualification? What are her qualifications? I have several, and I wanted to share that with you. So of course, I am Gabrielle. I am a tax professional, a finance professional, an accounting professional. I've been in the industry for many moons. It's been a long time, and also too, I love what I do. I really enjoy helping clients. I love helping families. I love making a difference. That's why for years I did a show online called Let's Talk Money with Friends, where I had an opportunity to talk to people about everything. We got into about money. We say money encompasses everything. So of course, the tax system is part of it. I had posted something earlier. I think you saw it. It's two things that are certain: death and taxes. Yeah, we all gonna die, and we all have to worry about paying taxes. So I would encourage you, invite your friends, invite your family members, let them know that this is happening and they can participate and they can enjoy, be part of that. So how many of you are nervous? It's like, how do I get ready for taxes, for my tax return? Well, if you are someone who has a job, it's very easy. You wait for your W-2 to come to the mail, and then maybe if you have a couple investment accounts, you can wait for those statements to come through from your bank, from your brokerage firm, and then what else can you wait for? If you just have a job, it's very easy because once you get those tax documentation, and usually the envelope will come and say important tax documentation, and all you have to do is bring that to your tax preparer, or if you do your taxes yourself, put it together and get it done, right? But if you are someone who's self-employed, it's a little bit more complicated because self-employed people have so much to do and so many responsibilities. But of course, there are some benefits to being a self-employed person. So being an employee, it's easier, it's less complicated, but of course, there are missed opportunities as well when you're an employee, especially when it comes to the tax system that we have here in this country. So definitely, I would say if you're a self-employed person, you have to worry about, okay, my financials. Do I have my balance sheet? Do I have my income statement? Do I have my P&L? Do I have all my documents ready for my tax preparer? Or if I'm going to do it myself, do I have all my documents? Because the tax system is voluntary and you get to self-report. However, if you report and you report in something that's erroneous, you will be penalized. So it's very important to keep good record. And actually, they call it, substantiation. It's very important that you have documentations to substantiate any position that you take in on your tax return. So for someone who is a self-employed individual or business owner, which those are mostly the people that I'm working with right now, it's very important that you keep good records. Now, I know sometimes people say, I don't have time, it's too much work. Well, you know what? When you decided to become a self employed person or a business owner, you taking responsibilities. You want to make your dream come true. But guess who's also an important part of that decision? That's the IRS and your Department of Revenue. So if you are able to make sure you have everything under control and you have support, you don't have to do everything just because it's your dream. You don't have to do everything. Hire an accountant. Hire a young person who's good with numbers. Hire somebody who's good with computers. Right now, you can actually hire somebody who's remote. I don't know if you want to do that because of identity theft and so many things, but find someone local first. And if you can really find, if you cannot find anybody, then you go overseas. Like there's a bunch of people all the time who are calling saying, like, we could do your accounting work. It's not going to cost you a lot of money because they're overseas and the cost of living is a lot less. So it's very important. If you're a business owner, it's important that you keep track of everything that you do throughout the year. Don't wait till last minute and you try to scramble. Oh, where are my expenses? Where are my this? Where are my receipts? No, try to do it on a monthly basis. The more you do it, the more a better system. You need to create a great system, because if you don't have a good system, then it's very hard. There is a word that we use in accounting. I wanted to share with you. It's basically, it means like, your documentation have to be timely. It cannot be documentation that you put in together last minute. If you put in something together last minute, it's gonna be questioned. But if you doing it as you go, you keeping track as you go. You just have to create a system. It doesn't have to be the best system. Now, I know a lot of people who have businesses, they're up for QuickBooks. Yeah, try QuickBooks. It's very easy to use. All you have to do is keep using it and you'll become more proficient at it. And there are so many other accounting system, easy to handle, that you can access and you can use. But at the end of the day, you have to have a system. If you don't have a system, I had written down here, you will be penalized. And the way you get penalized is, the reason why so many people are afraid is because, oh my gosh, how much am I gonna have to pay? How much you're gonna have to pay? It's gonna be based on your records. So if you're making money, you know that when you're a business owner, you make money, you spend money, and then you pay taxes. So that's the beauty about becoming a business owner. You make money first, you spend money, and then you pay taxes, right? So whereas someone who has a job makes money, pay taxes, and then live off the rest. Because what happens is that when you have a job, the first thing they tell you to do is fill out your W-4. Your W-4 is a form that you fill out to let your employer know how much withholding you want. So you're making $100,000, you're making $50,000. Your employer has you fill out a W-4, and then guess what? At the end of the year, they send you a W-2, and the W-2 shows that you made, let's say, $100,000, and they withheld 25%. Just a number. They withheld $25,000 for Uncle Sam, for your Department of Revenue. So because you're self-employed, you already had it done for you. And most of the time, all you have to do is present your W-2, saying like, okay, this is how much I made, this is how much that was withheld. Okay, this is the these are the activities that I have going on. If you have children, if you have a house, if you invested in your retirement or something like that, this is what I did. And the IRS will say, okay, great. This is what's gonna be your outcome. You don't need to send any more money because you've sent enough. Or you might need to send some more because you didn't send enough. Or, as a matter of fact, not only do you not have to send money, but we're gonna give you a credit. So we're gonna give you money. because you had too many children and you didn't make enough money. Okay. Or you had too many expenses and you didn't make enough money. So that's someone who's an employee. But someone who's self-employed makes the money, spend the money on everything, business expenses, personal expenses, and you name it, right? So you make $100,000, you have that money available to spend money on business expenses, personal expenses, and you live life. But if you don't keep record to show how much you made and how much you spend, especially on your business, so that you can reduce your taxable income by as much as possible, then you're going to have an issue, because if you don't have records for all your spending, all your expenses, if you don't have record, that's when the IRS is going to say, listen, we didn't have any withholding for you. You don't have records. Guess what? You're gonna have to pay taxes on the entire amount of 100,000. So it doesn't really happen because you have standard deduction or you have other deductions. But I'm saying, like, when you're a business owner, it's a great thing to be a business owner. It's a great thing to be self-employed. There are so many benefits to being self-employed, because I know how important it is for so many people to feel like they are running their lives and they have their own options. But don't forget, you have a partner. You have a silent partner who can become very aggressive if you don't do the right thing. And basically, that partner is the Department of Revenue or the IRS. So definitely do keep track. That's why tonight I wanted to say it's tax time. I know so many people are going to be nervous about, oh my gosh, what's going to happen. I know those who are self-employed are the ones who are usually the most nervous. They're worried the most because they have not kept good records of their activities throughout the year. So that's why I would encourage you. If you didn't do it so well next last year, it's okay. But going forward, it's still early. It's only January 14th. Start for 2026 with the right system. Start with the right system so that by the end of the year, you don't have to be concerned about, am I gonna be penalized for not having kept the right record. So now, it's very important to know that when you're a self-employed person, there's so many things you can do. I would encourage you, in order for you to minimize, everybody wants to minimize their tax liability. So basically, you don't want to pay too much in taxes, right? You want to reduce how much you pay because you want to keep a lot more in your pocket and send out less to the IRS or your state Department of Revenue. Well, one of the things you can do, I have it written here, is like, make sure you save for later. Save for your retirement. So many of us, who we all were the youngest once upon a time, right? You were the youngest at the job. The youngest at the job. Most of us are starting work at, well, I don't know, 15, 16. But professionally, I would say 22 after college or after high school, let's say 19. You start in your first job and you are the youngest at the job. Now, whether you are an employee or self-employed or a business owner, don't forget to save for later, because that's one of the tax incentives for today. If you invest or you save towards your retirement, that will help you reduce your tax liability for today. So invest. If you have a 401k available at work, or a simple IRA, or a SEP IRA, or a 403b, whatever your job has to offer, please invest in that. I remember I met a lady not too long ago. She used to be a housekeeper at a hotel in New England here, housekeeper, and because she had been disciplined, it's a discipline thing. You have to become disciplined. So she was disciplined at saving a portion of her income that she was making at the time when she was young and able to work. She saved 5%, and then she increased it to 6, and she kept going up. And by the time she left her job, she was close to 15% of her income. She kept saving. And now guess what? She's retired. She has a chunk of money that she's living off. So one of the reasons why I became a financial professional, especially a tax professional, is because when I worked in banking for many years, I used to see older women, especially older women. Some of them were single, forever single, or widow, or divorced, and they would be running to the bank on the first of the month looking for that social security. I joke all the time and I call it so security because it's so. Social security was never meant to keep you um, satisfied to take care of all your financial needs when you're retired. So that's why you, as a youngster, someone who's young right now, saving for later, it's an incentive. Not only is it gonna help you be independent as an older person, you don't have to knock at your kid's door and say like, "Can you help me?" You don't have to. They don't have to be, "Oh, grandma is coming. Let's turn off the light," because they know grandma is in need. They don't want you. Don't want our grandpa. You want to be independent, and how you can become independent. I know it's not easy. I know it's very hard right now, but you do one thing, and that one thing could lead to another. So if it's $25 a month, you can save that. If it's $10, whatever it is, if it's $100, if it's $500, whatever it is that you can save, you have to, because it will give you a tax savings today. Literally, when you save, it reduces your taxable income. So if you're making $100,000, you decided to put away $10,000, your the income subject to taxation will be $90,000 versus $100,000 if you decided to go into a tax deferred retirement account. Now we can talk about the wealth. The wealth doesn't have immediate savings, but still it has long-term savings. But yeah, and if you are a business owner, more so, you have to save. One of your expenses every year ought to be your retirement saving plan. Do that. And I'm giving this information here. This information is information that we all need. So if you are watching, and I see some people are watching, please make a comment. Feel free to reach out. And also to invite your friends. Let them know. Because you never know how one thing that someone here could hear here can change their lives. Start your business. When you have your business, don't forget to save for retirement. And if you have a job, don't forget to save for retirement. Because guess what? When you earn money, you pay taxes. When you save money, you pay taxes. And when you die, you pay taxes. There are so many types of taxation. I posted something about income tax. Income tax, that's what most people are worrying about right now, because the taxes that you need to pay on right now is on your income. But when you save money, you pay taxes. And when you leave money behind, when you died, most people don't, because they don't have enough of an estate. But those who do accumulate a large estate ended up having to pay taxes. So, as a matter of fact, I was talking to someone recently. She's divorced and she's collecting alimony, check, and she was like, "Gabrielle, do I have to pay taxes on my alimony?" Alimony is like the money that you are owed and you are paid as a spouse from another spouse when you no longer together and when you divorce. So she no longer married to her ex-husband, and he's paying her alimony. So basically, your if the alimony that she's receiving, unfortunately, is before January 1st, 2020, if the agreement was signed before January 1st, 2019, then it's taxable and also deductible. Yeah, taxable and deductible. But if it was after January 1st, 2019, then it's tax neutral. My the thing is moving. It's tax neutral. You don't have to pay taxes if your agreement for divorce happened after January 1st, 2019. I just wanted to throw that out there because so many people do get to go through a divorce, and and that every time there's a activity, or whenever you have a event, there could be a tax liability. So it's very important to work with a tax professional. And the reason I said that is because, not because I am in the industry, but also because I know it could save you a lot of headache and a lot of money. Why do I say that? Now, when we talk about saving all your documentations and making sure that you have your documentation, but the tax professional that you're going to be working with too has to understand how to allocate, how to write off, how to depreciate, has to understand all that stuff. I was talking to someone who said, Gabrielle, she's a tax accountant. She said, can you imagine one day I called a client and I told her that I had just saved her $500,000, to save someone $500,000. And the reason why she was able to save that taxpayer $500,000 because she knew about the tax law that her previous accountant didn't know about. So just like we're saying, like, stay on top of your statements, stay on top of your expenses, stay on top of everything. Make sure that you are organized and you keep track of all your expenses so that you can take all the allowable deductions that you have. It's also very important to work with someone who understands the tax codes, the taxing system. If you're working with someone who doesn't understand, because this person comes, the tax season for them is January through April, and then they go do something else, and they don't do any continuing education. They're not investing in the taxing system. They're not investing in the education of learning about the new codes. Right now, we have a new president. We have the big, beautiful bill, right? We have so many different. Every time we have a new president, we have new tax bills that are coming out, and you have to understand all the different nuances of those new bills. So it's very important that you work with someone who understands, because if not, you will lose out on opportunities that you don't want to lose out on. So it's tax time. It's tax time. Don't be nervous. Learn about some of the best practices. And one of the best practices that I just shared here is the fact that the first thing you can do is be prepared. If you are self-employed, you definitely have to make it a habit throughout the year to keep track of your records. Good record keeping is the key to minimizing all tax liabilities. Now, after you keep track of your record, be sure to hire a professional who understands how to help you minimize your tax liabilities. Because if you have the record, but the person does not know, it's not a good idea. And the second, if you have to do it yourself, if you want to do it yourself, that's fine. But you have to keep up with some of the changes. If you're not keeping up, you are doing yourself a disservice by investing time in doing something that you're already doing wrong. So it'll save you money and time to hire a professional who understands how to do it. And I just mentioned earlier that if you are self employed, one of the ways to minimize your tax liability is by investing in your future. Save for retirement. Find a retirement plan that you can fund. There are so many options out there. Do not say tomorrow, tomorrow, tomorrow. Tomorrow never comes. The key is to get it done today. So it's January 14th. You are self employed. It's the time to call today or tomorrow. Call financial advisor, a bank, brokerage firm, and say, I would like to set up a 401k account. I would like to set up an IRA. I would like to set up any type of account that is tax deferred, that will help you reduce on your tax liabilities today, but also help you save for your retirement. Now, if you are an employee, call your HR department tomorrow, tonight. Email them, say, you know what, it's the first week or the second week of the year. I would like to save for my retirement because it was going to help me reduce my tax bill, but also too, it's going to help me save for my retirement. Two things are certain. death, and taxes. In order for you to defer current tax liabilities, you have to keep record of good records of your expenses, and also do everything that you can to defer to a 401k, 403b, 557. Oh my gosh, traditional IRA, SEB IRA, so many others, compensation, deferred compensation. There's so many things. And also to life insurance doesn't give you immediate benefits of tax benefits today, but also it could give you long-term benefits. So, we say two things are certain: death and taxes. You earn money, you pay taxes. You save money, you pay taxes, and you die, you pay taxes. Either you pay tax now or you paying it later. The key is the key is to have both. Find a way through the available accounts, retirement accounts, to pay tax later. Defer the tax. Save, deduct it today so that you can pay it later. But also, you can always find accounts to their accounts where you can pay the tax now so you don't have to pay it later. One of which is a retirement account called the Roth. And a lot of people do that Roth 401k or the IRA. But I would encourage you to look at other options. Next time we get together, we will talk about life insurance because we talk about death and taxes. You pay taxes, but guess what? When you die too, you need to have life insurance so that your family doesn't have to go hungry. I have to deal with total destitution. So that's why we are here tonight. We wanted to share the importance of being ready, getting ready, and being prepared. Do not wait until it's too late to be ready or be prepared. The key is to do what you need to do now, because at the end of the day, time waits for no one. And the taxing system, I had posted on my social media page saying, like, it's so complicated. So many people find it very hard to understand. Today, I spent an entire day fixing somebody's mistakes. An entire day, because that's what I do for work. I literally file corporate taxes, partnership taxes, and taxes for high net worth clients. Okay. And I spent the entire day today fixing somebody's mistakes. And I went into the other office. I was talking to one of my colleagues, and she's like, Gabrielle, I've been here since 5 o'clock. She comes to work at 7. And we were leaving at 7 o'clock at night because we were fixing other people's mistakes. So that's why I'm not talking out of order when I say find yourself a competent tax professional. Not only is that person going to help you save money, but that person is going to be worth it. You want someone who's worth it. You don't want someone who's not worth it to be coming up with numbers. My gosh, so many numbers, so many things that are not making sense. Okay. So it's very important that you work with someone who knows the system, because tax season is not just 4 months or 3 months out of the year for them. That's their livelihood, that's their passion, that's their work. A CPA, an EA, someone with a high degree of taxation. Do work with people who know, because, yeah, two things that are certain in life: death and taxes. So, in order for you to avoid and to minimize that, you have to spend your time, invest in the right type of people who can help you. Okay. So that's what I wanted to share tonight. I didn't want to be too long. I just want to encourage you to not fret, to not be discouraged, to not be panicky. There's no need to panic. If you have best practices, if you know what to do, you don't need to panic. Every year tax season comes, by March, I'm done with my taxes, because guess what? I keep record of all my expenses. I keep record of all of everything that I do, and I wait for my financial statements or my tax statements to come through. Once they come in, boom, 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 I'm done. The reason I don't panic, A, because I'm ready with all my records, and B, because I know what I'm doing, because that's what I do for work. I have a master's in taxation and I'm an EA. Okay, so I know what I'm doing. So it's the same thing. If you are a professional, if you are a business person, a business owner, a self-employed individual, don't panic. Follow some best practices. Keep track of all your expenses, keep track of your records, maximize your tax deferred accounts to for retirement, keep receipts for everything that you do, and then hire a professional. If you're not doing it yourself, if you feel confident enough to do it yourself, that's fine. But if you want to make sure that you're working with a professional who is staying up to date with the law, like I know for me, my license, in order for me to keep my license, I have to take 72 hours of CE's continuing education every 3 years. My license is renewed every 3 years. That's how I keep my license. Okay, it's a national, recognized by the Treasury, the IRS. In order for me to keep it, I have to take 72 hours. Okay, of CE credits. So if you are working with someone who's not staying on top of the tax laws, they're not familiar with the current codes, the current regulations, the current tax laws, then you are doing yourself a disservice. Sometimes you think you're saving money and you're doing just the opposite. And I'll say this one last thing. One of the things that people are losing money out on all the time, if you don't know how to do it, is depreciation. Again, going back to what I said, this lady who was able to, a coworker was able to save somebody $500,000 because all these years they had been going to somebody who didn't understand the depreciation laws. And because they didn't understand it, they kept making mistakes. They actually had this person paying more than they need to pay. And the law states that you don't need to pay more than you need to pay. You just need to pay your fair share. And that's why when you work with a tax professional, you learn how to do your fair share. So, how do you find a tax professional? Go ask your friends if they're working with a CPA or with someone locally, or Google online. That's a good thing. Or go visit an office nearby. Find someone, interview them, have a conversation with them. You may not know everything you need to ask, but at least ask a couple referrals so that you know you're working with the right person. One of the things that I would say, and I'm quite obviously I'm in a minority, and I'm one of the few in my community who does what I do. And many times I would be invited. I get invited to the IRS's office or the DOR's office because I'm in Massachusetts. The DOR's office, I'll get invited and I'll go there and have a conversation with them and I'll sit down with them and they'll talk about how frustrating they are because so many people in the communities, especially black and brown communities, the ones who are in need of the support the most, they are cutting corners by not going with the right people to help them file their tax returns. And therefore, they are leaving money on the table. You are leaving money on the table. Had this lady, she happens to be affluent, so maybe $500,000 wasn't gonna make a difference for her. Okay. But for a working class family, you missing out on two, three, $4,000, that's a big deal. Leaving money on the table because you are trying to cut corners by going to your uncle's friends, your sister's friend, the bus driver down the street who doesn't really know anything about taxes, and you say, "Oh yeah, fill out my forms for me," and they fill out the form, but they did not do the best job, and by not doing the best job, they ended up losing, causing you to lose money, to not get everything that you deserve. So when I go to the IRS and the DOR, and they're saying like, I don't know what to say, I don't know what to do, we don't know what to do. Well, I will right now I'm encouraging you. I know it looks easy, but it's not that easy. And in order for you to be most effective and most productive and most and get the most out of the taxing system, and to treat yourself the best and to really get everything that you are entitled to, you definitely have to make sure that you follow some best practices. And I do believe one of which is by working and making and building a relationship, especially if you have a business. You need a business partner who understands the codes, who understands the law, who understands the system, so that they can help you maximize your minimize your tax liabilities and maximize your refund. So thank you so much for your time. Please share this video with your friends. I do notice that several of you were online here with me. If you have any questions, feel free to connect. We are looking to connect with folks and to share more because that's our passion. Financial services, we've been doing this for over, it's been 2 decades now. And we love what we do. And every single day we get an opportunity to impact people's lives. And a lot of the people right now we are working with are, folks who are perhaps could have gotten help from anybody, but it is what it is. And we are looking to continue to do the work that we do. And if you notice that my channel here is called Let's Talk Money with Friends. For years, I was on social media, 4 years since COVID, doing a show on a weekly basis called the show was Let's Talk Money with Friends. And if you would like to see some of the old videos, they're still online. Feel free to review them because I do believe this information is timely and relevant because money encompasses everything. And if you know, if you have knowledge, if you have comprehension, if you are able to decipher what is right, what is wrong, and if you are able to understand the taxing system and how money works and how money can work for you, you're gonna be winning. So I'm looking forward to seeing you winning because I am in the business of winning. So have a great night, have a blessed night. Until next time, see you later.